Hi, welcome to the Q1 2026 General Commentary with me, Gillian Seguin. I am an Associate Wealth Advisor at IA Private Wealth with the Reyes Group. So we started the quarter quite choppy, but probably not for the reasons we were all expecting. We were still definitely sensitive to the noise around tariffs, inflation, and possible recessions. But after we saw what happened in the Middle East, this quarter was really plagued with, or not plagued, but affected by market reversals, stock recalibrations, and a lot of sector rotation. So last year, we ended the year primarily propelled by the mega caps and the AI technology stocks. I've referred to them in the past as the Magnificent Eight or Batman. Once again, those positions or acronyms stand for Broadcom, Apple, Tesla, Microsoft, Amazon, Alphabet, and Nvidia. And Meta, Batman. Meta is in there as well, which is formerly Facebook. So when I talk about sector rotation, I'm referring to a real sell-off in that AI or tech sector. We saw almost a 13% drop, which represents over $1 trillion in value. And investors were moving their money into more defensive positions. Some of the resilience that we saw last year has evaporated with the weeks as they go on without any type of conflict resolution with Iran. And most of the stocks that were up the highest before the tension started have been the hardest hit. So again, those Magnificent Eight, emerging markets, international equities, and actually gold and silver have come off a little bit as well. The Canadian stocks, though, our Canadian market seems to be the most resilient, and a lot of that has to do with strength in our energy sector, materials, and financials. So on that point, the Toronto Stock Exchange finished close to flat, but up 0.8% after the first quarter. The S&P 500 was down 4.8%, the Dow Jones was down 5%, and the Nasdaq was down about 8%. March was setting up to be the worst month in the markets since September 2022, but on the last day of the month, we did have some hope that a ceasefire and some type of end to the war was going to happen. And so we did see a real strong rally on that last day, and most of the markets finished up on the last day of the quarter. The price of oil had eased about 3.2%, so it ended the quarter still north of $100 a barrel. But as I put in my commentary, don't expect to feel the ease at the pumps anytime soon. The prices of the gas at the pumps has said to be going up like a rocket and down like a feather, much like the price of oil. Earnings season will kick off this week, April 13th, and if oil prices do remain high, which they are currently, we expect to see some pretty conservative guidance accounting for the higher costs, particularly in those companies most affected like airlines and cruise lines with that price of oil. Canada is set to benefit a little bit from the higher oil prices as we are a net exporter. So we're positioned okay to weather this storm for a bit longer. And then the last other key factors to really watch this quarter, the Q2 2026, is we'll have a change in the Federal Reserve leadership in the US, midterm elections coming up, and possible resumption of tariff talks and trade negotiations. We are also seeing weakened economic conditions globally, particularly in China. So that is the quick report for Q1 and looking ahead. Thanks for tuning in.